Today has not been a great day for crypto. Everything is down and most people think that's because Bitcoin declined. But actually the reason is different. Bitcoin is not leading the market here. The question is though, how much longer can we fall? Let's have a look at some data most people are not considering. Because yes, there is some correlation in crypto. When it's raining, it tends to pour. But that doesn't necessarily have to be because of Bitcoin. Because Bitcoin's dominance recently actually went up. Those dominance charts are very useful to find out what's currently the driver of a certain price movement. Bitcoin as a fraction of all of crypto actually went up. The Ethereum dominance, however, went down. So ETH lost more than the average. The same is true for the others' dominance. So this is now all of the cryptocurrencies that are not in the top 10. So comparatively speaking, Bitcoin held up relatively well. This was a sell-off driven by Ethereum and by the altcoins. Bitcoin got dragged along with it. Now, how much further can we go down? What we've got over here is Bitcoin with its best moving average, the 120-day SMA. I like this indicator a lot, so I tend to sell or even bet on falling prices whenever Bitcoin is below that smoothed line in turquoise. And I tend to bet on rising prices whenever we are above. So this is a trend following strategy. And it's rather common to use moving averages. Using 120 days as the duration of the moving average isn't that common though. Most people use 100 days or 30 days or 200 days. 120 seems to be somewhat arbitrary, but it's not. I made a back test and checked all the moving averages from the 2-day all the way to the 200-day. Which one works the best whenever we buy when the price is above and whenever we sell when the price is below. And when we run that back test and we look at how well does the strategy in general work, the 120-day simple moving average is the best. But in general, moving average trading does outperform buying and holding. So the back test shows that buying and holding during the test period, which is roughly 7 years, gave us 28%. So I did start at the top of one of the bull markets. And if you go too short in the moving average duration, things aren't that great because momentum doesn't change that fast and because also there's quite a bit of trading fees. So I included 0.2% trading fees, but everything above 30 days tends to be better than buying and holding. And again, the 120-day SMA is the best. And so we definitely have to be cautious once we fall below that line again, which by the way, currently is at $93,000. Here is how well that moving average trading strategy worked. So this is Bitcoin in white and in the line in turquoise is the performance of the moving average. We started with $10,000. Here's the same chart on a logarithmic scale and we can see how over time we are getting consistent gains, much more consistent than by buying and holding Bitcoin. Now this strategy helps us to a degree, but it's always good to also look at the monetary in and outflows into the system. So what's happening with the stablecoin market? Because that's in the end what's driving Ethereum and the altcoin. One might make the argument that Bitcoin isn't driven that much anymore by the stablecoins because there's more and more demand by institutional investors that directly move from fiat to Bitcoin, maybe through the ETFs. But when we see a sell-off like today that's not Bitcoin driven, then the stablecoin market definitely matters. Now what I see over here is the stablecoin market cap over time. It went down massively when Terra Luna imploded. So that was the anchor protocol or the UST stablecoin. Subsequently also FTX imploded. But since October of 2023, the stablecoin market cap is going up again. Now there are two things I like about this chart. First of all, it's very consistent, as in there's very little volatility here. We can see when things are expanding or contracting. That's not so clear with price charts. But secondly, there's also a fundamental reason for this to go up and down. This is going up when you send your hard-earned fiat currency, say, to a centralized exchange. And then the centralized exchange sends this over to a stablecoin custodian, for example, Tether. Tether holds the funds in a bank account and then mints new USDT, new stablecoins on the chain. And we can see that minting in the chart. Of course, it also works the other way around, right? When you're pulling out money and you want to get fiat currency back, then the stablecoins get destroyed. And so since October of 2023, money is flowing into the system. And so it's no surprise that Bitcoin and the altcoins tended to rather appreciate since then. Now, money flows into the system relatively constantly. Still, we do see all of that price volatility. And that doesn't come from redemption and from destroying of stablecoins. This actually happens because of swapping activity. So you might have stablecoins in your account, then you swap this to altcoins, get some risk. Then after a while, if you think you've made enough gains, or if you simply just don't want to be that much exposed anymore, then you swap it back to stablecoins. So the swapping activity is actually what creates all the short-term price movement. And this is a nice chart to look deeper into that swapping activity. What we've got here is the stablecoin dominance. So how much of all of crypto is currently in stablecoins? And in the last 1.5 years, this tended to trade between 5% and 9%. And there's a very strong inverse correlation with crypto. For example, here, when the stablecoin dominance was low, Bitcoin hit a local top. Then the stablecoin dominance went up, and when we hit that peak in that dominance, Bitcoin hit a local bottom in the price. In other words, when stablecoins get deployed, the stablecoin dominance is going down and prices increase. When stablecoin dominance is going up, that means crypto is getting sold for risk off and prices tend to decline. And since we are in this nice trading range, we can very clearly see when the market is heated, when it might make sense to sell, and when the market is very depressed and it might make sense to buy. And so currently we are slightly high on that scale. So people are somewhat spooked, but we are not yet at the top where it might make sense to maximally buy the bottom. We saw a very similar dominance on the 5th of March of this year. And then the stablecoin dominance went up and the Bitcoin price went down. Let's say we see the exact same movement again and people continue to sell their crypto. How low could Bitcoin go? Let's just look at how much Bitcoin depreciated during that stablecoin increase. The answer is 15%. So from the current price down 15%, we are at 86K. That's potentially a local bottom. Now, I'm not saying that we are going to see this for certain, but I am saying that at that point, people are quite risk off and people hadn't been that much in stablecoins since the beginning of 2024. And so this is a bit of a dilemma. Because if 86K is the potential bottom, that means we could fall below the 120-day SMA just to then get above it again. I believe this is a very likely scenario. I will still sell when we fall below the SMA and buy back in again if we go above. Yes, this incurs a few costs, but that's okay. I simply like how well this strategy worked in the past. And I rather replicate this performance than just working with gut feel. But in general, we have to be prepared for a drawdown to the mid-80s. That's definitely possible, just based on the volatility of stablecoin dominance in the past. Now, the vast majority of people in crypto approach the market in the wrong way. Most people try to find those multiple X returns. They try to find the few assets that make outsized win. But this is clearly a game against the odds. Most altcoins tend to go down massively. A 70% decline over here, another 80% over here. It's all double-digit losses. Now, the common counter argument is that maybe we don't just buy one or two altcoins, maybe we buy multiple and then we might get that high flyer as well. But the problem is that diversification, so spreading the risk across various assets, does not work with altcoins. Everybody can launch an altcoin. Everybody can increase the supply as they want. And so in aggregate, the altcoins tend to do worse compared to Bitcoin and Ethereum over the long term. What we've got over here is the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10? And 3.5 years ago, this was still at 19%. Now it's below 8%. So had you invested in a broadly diversified basket of altcoins, you would have on average underperformed the market by 60%. Instead of trying to find the needle in the haystack and most likely lose, at least in the long term, isn't it better to try to get the odds in our favor? If most things don't perform that well compared to Bitcoin and Ethereum, if a lot of altcoins inflate in supply over time, so supply grows faster than the demand, then why don't we bet on relative valuations? It's a bit more complex of a game, but I believe that this added complexity does help. We want to make our investing as simple as possible, but not simpler than that. And so here I am doing something differently to most other YouTubers. Most crypto YouTubers, they just show one single win. They say, here, I made some money over there. Just trust me, bro. Very few are willing to share their trading history. Now, here's my trading history on Hyperliquid. This is where I started trading decentralized perpetual futures. This is the profit and loss. and the maximum drawdown was only 5.1%. Now, obviously, I'm not going to share my positions open here on YouTube. That's part of the premium membership. It's down below. It's thebitcoinstrategy.com. Now, the issue with trying to pick the winners is, of course, that we have a very low chance of succeeding. But the beauty of crypto is that it's still an incredibly inefficient market. People always say that capital markets are efficient, but in the end, it's the people that make it efficient. So if you know more than the average market participant, if you do more research than most people, if you're part of a group of people that do more research than the average market participant, then we can win. Then we are the people that make the market efficient, then we are the ones that make the profit. For example, this here. This is pure inefficiency. This chart shows the balancer token relative to Ethereum. A very constant underperformance. And we can make money from that underperformance. As the price is going down, we are printing money. Yes, we are betting on falling prices. And yes, this might be a bit more scary at first if you don't know what you're doing, if you haven't yet learned about this whole topic. But the risk is every now and then a potential short-term pump, again, when we bet on falling prices. But the reward is a very long-term constant trend. We can also turn this chart around. So this is now Ethereum relative to balancer. So basically buying this when we long one asset and short the other. So the inefficiencies are not necessarily that obvious in the macro, as in the market is expanding and contracting in a way that's not that predictable. But the relative valuations are much more predictable. The risk to reward in a chart like this is quite obvious, isn't it? People make all kinds of mistakes. People, for example, also just leave their stable coins in their wallet, right? Let's say you trade actively, you've got some stable coins and you don't use this for anything to add some additional return. That's also a mistake. For example, here we can get 15% APR by providing liquidity to Hyperliquid, the largest decentralized perpetual futures exchange. It's comparatively safe. It's definitely worth the risk for 15% APY. And so this is then the feedback that I get in the chats. It was the first nice trade. Thanks, Gerhard. And over here, a few more positive trades, etc. And people make their money back very quickly. Premium has already paid for itself. And yes, if you've only got a few $100s in crypto, this is probably not worth it. But if you're investing several thousands of dollars and you're still inefficient in your trading, if you still hope for your one altcoin to outperform, it probably makes sense to learn a bit more. And this is what I mean by learning. I've published more than 100 tutorial videos on various topics within crypto, on how to use relative valuation bets, on how to manage risk, on how to do on-chain analytics. Feel free to binge watch all of this. And of course, I'm also sharing my own trade. So for example, here is a trade opened on the 30th of April. And here's then how I closed this 5 days later. Yes, this is only a single example, but that's why I showed the overall portfolio chart before, right? This one over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 when everybody was super hyped about crypto. Currently, the attention on crypto is rather low, and so the price is also lower. If you lock in that price now, you will not be affected by the price increase that might happen once the market picks up again. So everybody that signs up locks in their current rate. If it's your first time here, feel free to subscribe. I publish here regularly. Like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There should be somewhere a card over here. You can just click on that and it will lead you directly to the sign up page. So see you over there as well. Cheers.